Shares of GE tumbling about 4% today after investors got a gander at the latest quarterly results. And at least according to some, they weren't pretty. If the sales continue to decline, the company, which used to generate about $185 billion in sales, it'll only be at about $140 billion run rate. And is the debt burden too large to handle? Let's bring in an expert. He's been following this for a while, Charles Ortel of Newport Value Partners. Charles, good to have you with us.
Thanks for having me on.
You have been following this for a while. It seems as though this is one of these you've just been carrying around for a long time.
It seems that way.
Now, what about the results? Because you say the results are really bad, but it seems as though there might be some bright spots. What about those $4 billion in cost reductions, plus the order decline, at least for the industrial side of the business? The decline was like 18%, down from 25%. Okay, you could have gotten better, but a little bit better?
Well, what we think here is that this company has been getting a tremendous amount of deference for way too long. And if going back to December, I think it was 11th, 2007, we were told that 2008 results were in the bag. And we've now had a series of stumbles dating, many, many quarters. We think the correct way to look at this business is to subtract, in the revenue line, to subtract GECS, the financial holding company's interest and other charges, from gross revenue, the way every other significant financial services industry does. GE, for some reason, chooses not to do that. And we think that you should be looking separately at GECS results and everything else. So taking GECS first, we think the proper comparables for the big global scale companies, obviously best of breed is Goldman Sachs, then you've got JP Morgan, you have two sort of, I would argue, in the question mark pile, Bank of America and Citibank, and then you have GECS. When you go and you look at third quarter 2009 versus third quarter 2008, GECS has not managed to their net revenues actually fell, and their pre-tax profit from 2008 went to a loss in 2009.
Right, the pre-tax loss was $1 billion, right? It was $1 billion larger than expected.
It was, yeah, it was a $1 billion loss, and the only reason they were able to eke out, or significant reason they were able to eke out a EPS figure was that they took a tax credit,
right? A larger tax credit.
Greater than the pre-tax loss on that segment. So that's very squishy math over there. The margins in GECS, the interest margins, both before and after the loan loss allowance, are well under these big comparable companies. So we think the GECS business is troubled. There's no question about that.
What about the real estate business in GECS, right? I mean, that certainly is something that a lot of people are still worried about. Loss much worse than expected.
Absolutely, and I think you have to take a gigantic step backwards and say, do you like the basic business construct of GECS? And we think that it doesn't make sense in an environment that we see coming, where nominal interest rates are going to rise and put pressure across the global economy for another leg down. We think this is a very dangerous business that has too little equity in it and way too much debt. Then when you look at the other piece, what really got our attention...
The industrial businesses?
Everything other than GECS. So it's NBC, as with the health and all the industrial businesses. In the bulk of that pile, all of those global businesses are number one or number two, with some exceptions. And you would have thought in this period since December 2007, where the financial world has been reset and governments are helping companies everywhere do really well, you would have thought that true global market leaders would storm. Instead, the results for this piece, actually the way we do it, the revenues were down 13% and pre-tax profits were down 16% in the third quarter. That's a major drop for a company of this scale. You would expect if you're down at 20th in the world, but not 1 and 2 in the world.
All right.